Rick. Hi, friends. Welcome to Webinar Wednesday. Thank you for joining us. It is 11 o'clock. I'm going to give this a few minutes to get started. If you've been following me on Instagram, yesterday I had posted something in regards to being a parent and sometimes running a little late. So we're going to give some grace to some of those people who are running a little late. I would really love to know where you are watching this from today. We service a lot of states with our no income, no job, no problem webinar. So put in the comments. I would love to know where you're watching from today. I know that we have people from Puerto Rico, definitely people from Pennsylvania, but I would really love to know where you are all watching from. So in the comment section, put where you are watching from. Actually see a handful of familiar faces in here joining us today. So good to see many of you. Give it just a few seconds here and then we'll get started on our webinar Wednesday. Again, thank you so much for joining us and taking some time out of your day, whether you are a real estate agent looking to do some investigation for your clients, whether you're looking to do it for yourself, or whether you're a loan officer interested in knowing what this product is. Thank you for joining us. I know that this has definitely created a decent amount of buzz. So I'm going to go ahead and get started now. It's about 11:02. Again, thank you for joining us today on our webinar Wednesday. We try to do these webinars to be informative, to be helpful to the community, to real estate agents, to clients, to loan officers. Knowledge is power. And so I'm glad that we can do this. Today's webinar, like I said, is going to be focused on our no income, no job, no problem loan. For those of you that don't know me, my name is Andre Munar, and I am the president and co-founder of Collab Lending. I've been in the industry for 17 years. I really have a passion for serving and helping people. So let's go ahead and get started. So our agenda today is going to be quick and short because I want to be able to answer any questions that you may have. We're going to talk about what is the no income, no job, no problem loan. It is what we call Dscr. So we're going to cover what is Dscr. What is the opportunity for Dscr loans? How do you calculate Dscr? What are the requirements of Dscr? I'm extremely proud to say that we brought Dscr loans to Puerto Rico, and I know many of you are interested in that. So we are going to specifically cover also how does Dscr work in Puerto Rico? What states can we help you in? There are over 25 states that we can do this loan in for you. And then at the end, I'm going to answer your questions. So let's go ahead and get started. What is Dscr, you may ask? You've probably heard that term used around. I also refer to it as the no income, no job, no problem loan. Dscr essentially just stands for debt service coverage ratio. Dscr is a metric used to evaluate how much cash flow is available to make the necessary annual payment on any outstanding debts. We're going to see that a little bit later, but it shows the ability or lack thereof to pay all of the interest and principal of any outstanding payment, any outstanding debts. And that's really important. Again, it shows the ability or lack thereof to pay all of the principal and interest of any outstanding debts. That's all Dscr is. And so that's why I broke it down and I said, if you don't have verifiable income because you're self-employed and you don't like to, report it to Uncle Sam, or if you just don't have a traditional verifiable job, this loan is for you. What is the opportunity for Dscr loans? So 1 to 4 family residential residential rental units represent the largest market share, about 53% of the total rental market. Overwhelmingly, the majority of single-family residences are owned and operated by individual and small investors. And so what that means is that Fannie Mae has a maximum number of properties that you can finance with them. DSCR does not. So if you are maxed out at those 10 properties and you're trying to figure out how can I continue financing more properties, DSCR is a great way to do that. The last one is only 20% of single family residence assets were purchased with mortgages. The rest were purchased with cash or hard money. And why is that important? It is something called delayed financing. So an investor sees a property, they really want to jump on it right away. They call their private money lender friend because they don't want to go through the process. They don't want to wait for 40, 60, 90 days. They got to jump on the opportunity right away. So they just pay for it in cash, or they call their private money lender friend and they just pay for it. Well, the DSCR loan is going to allow that investor to go ahead, close with the cash or the private hard money, the next day make application to take their cash back out. And guess what? They're now going to have that cash back out and they're going to be able to purchase more properties. And so that's really important if you're a real estate agent, if you're a loan officer, or if you're an investor, because you just keep doing that over and over again. Again, that's called delayed financing, and we do that on DSCR loans as well. So this is how you calculate the DSCR. And I think this is one of the things that people say, well, why does the lender not care where I work? Why does the lender not care how much income I've got coming in? They don't check that. When we take your application for a DSCR loan, we literally ask you your name, social, date of birth, and that's really about it. We don't take we'll get your bank statements to make sure you have enough money for the down payment, but we don't ask for anything else. We don't ask where you work. We don't ask how much you make. None of that. It's literally based off of the debt service coverage ratio. So the way that the DSCR is calculated is you take the rent. So what's going to happen is an appraiser is going to go out to the property and she is going to say, this property could rent for XYZ. You're going to divide that by then the PITIA, which is the principal, interest, taxes, and any association dues should you choose to buy a condo. And that's going to give you what we call the debt service coverage ratio. So you'll see I did two examples there for you. The first example is the appraiser goes out, he says, hey, per my calculations in the area, this property could rent for $1,500. And the total mortgage payment, including the principal, interest, taxes, and any association dues, is $1,250. Well, the DSCR for this is going to be 1.2. And we're going to talk about the requirements of the lender, what they like to see in the next few slides. Another example is, let's say that the total rent for a property based off of what the appraiser could come up with was about $2,000, and the mortgage payment was going to be about $2,250. Well, in this case, the DSCR then is about 0.88. So again, that's how you calculate the DSCR. Again, it's debt service coverage ratio. Normally, a lender wants to see about a 1-to-1 ratio, which would be great, right? That means that the rent covers the mortgage payment. And if you remember at the beginning of the slides, we said, what is DSCR? And it is the lack thereof or the ability for the property to cover its mortgage payment. So what are the requirements for DSCR? So you're going to have to stay with me a little bit on this topic. DSCR, because it's a non-QM loan, because it's by investors, because it's basically a portfolio loan. Again, I'm going to talk about Puerto Rico specifically later down the road, but in the other 25 states that we lend in, we have well over 20 lenders who do DSCR loans, and every single lender has their own small little requirement. So one lender might like this, one lender might not like this, but these are some of the basic requirements. It is for investment properties only. The borrower's qualification is only based off of credit score and cash flow. Again, I don't ask you your pay stubs, W-2s, tax returns, how much you make, and I don't ask you where you work. No income, no job verified, no problem. You can, the other thing that I love about this product is that you can close in a personal name or an LLC. You can even close in a brand new just found LLC, which is amazing. So if you're a brand new investor, you can go ahead, just create a brand new LLC and put it in the LLC. One of the caveats is that most lenders do require that you have some type of experience owning or managing properties. And this is one of those guidelines that varies by lenders. Usually the credit score, depending on loan to value, the minimum credit score will go down to a 600. This product does exist if you're purchasing a property, if you want to rate and term it. So if you want to refinance it because you had a hard money loan, or if you want to do a cash out refinance. We all know that there's a ton of equity right now out there in homes. So, if you have an investment property and you own it free and clear, or you only owe half of what it's worth, it's a great time to pull that cash out and buy yourself another investment property. Prepayments do exist and it does vary per state. So I want to let you know that depending on the lender, this is one of those guidelines, our maximum loan amount is $3 million. So there's a ton of luxury homes out there. So we can go up to $3 million. Gifts may be okay. I'm going to say about 90% of my lenders do not like gifts on investment properties, but there are some lenders who say, okay, we'll allow a gift as your down payment. It can be any of these types of properties. It can be a single family residence. It can be a 1 to 4 unit property. It can be a condo. It can be a condotel. It can be a manufactured home. Short-term rentals and VRBOs are okay depending on the lender. And for the condos, we do warrantable and non-warrantable. Again, one of the things that I love is there's no limit on the number of properties financed. Fannie does max you out to having 10 properties financed under them. And that's why so many clients then move over to the DSCR option because there's no limit of properties. The maximum loan to value is usually 80% before kind of where the market was heading and all of that. We were seeing 85 to 90%. I'm hoping for that to come back in the future, but right now we're really seeing the maximum loan to value of 80%. Reserves may be required per lender. Usually you'll see, depending on the number of properties you have, depending on the loan amount, usually anywhere between 3 to 6 months. The other really neat thing about this product is that there's 15-year term available, there's 20-year available, there's ARMs available, and there are 40-year interest-only options. A lot of people say, why would I do that? And sometimes you want to do an interest-only option because you know that that house, the equity in that house is gaining so fast that you're just going to be able to make up for it in the end. And we have lenders who will do no ratio, whose requirements are either no ratio or they want to see a 1.25 DSCR option and everything in between. And it's all going to depend on your credit score. It's going to depend on your loan to value. So sometimes the lender will say, okay, if the client's loan to value is 75%, we don't care what that ratio is. So that means that the mortgage payment could be $2,000, but the appraiser says this will only rent for $1,000. That lender's not going to care. And sometimes the lenders will say, we require at least a 1.25 DSCR option, DSCR ratio. So we really have everything in between there. And that's why I said these are some of the requirements. Definitely reach out to myself, one of our loan officers, visit colablending.com, reach out to one of our LOs or call our office. We'd be happy to help you. But again, it really depends on a lot of factors. These are just some of the brief overviews. We have over 20 lenders who do this DSCR option, and those are some of the basic requirements for DSCR. So I want to talk about DSCR specifically in Puerto Rico. I know a lot of people are investing in Puerto Rico. If you haven't been to Puerto Rico, if you've never been, I really strongly urge you to visit here. You don't need a passport if you didn't know. And I live here, obviously, to me, this place is like heaven on earth. So in Puerto Rico specifically, we did bring this option. DSCR has not existed in Puerto Rico. I get so many calls for investors calling me saying, hey, I don't show money on my tax returns. I don't have a traditional job, but I have a down payment. and I really had no place to take them. Well, I'm excited to let you know DSCR is available in Puerto Rico. The maximum loan to value here in Puerto Rico is 70%. It can be a purchase or a refinance. Again, we can do that delayed financing option here in Puerto Rico. So if you were an investor and you bought you bought cash or you did hard money while this product was not available, it is now. So definitely reach out, get your cash back out, go buy yourself some more properties. If you're going to do a cash out, the maximum cash back is $1 million unless your loan to value is 55%, then there is nothing required. The lender is also requiring at least 2 appraisals on this DSCR product. Again, it can be a single family residence. It can be a 2 to 4 unit property. It can be a warrantable or a non-warrantable condo. And we're even doing condo tells. I know there's definitely a few condo tells in Puerto Rico, so we can do that. Again, one of my favorite options, you can do it in your individual name, or you can do it in an LLC. I know I've got a ton of investors out there who love to put it in their LLC. The lender is also requiring 3 months reserves for Puerto Rico. Our maximum loan amount here in Puerto Rico, depending on your credit score and loan to value, is $2.5 million. Again, tons of high-end properties out there that are renting for big bucks. So we are going to $2.5 million on our DSCR. And in Puerto Rico, we're going down to 620. But you got to put 40% down. And specifically in Puerto Rico, the lender is requiring that you must own a property or have owned a property in the past 24 months. And so that is a little brief overview about the DSCR product in Puerto Rico. So what states can we help you in? We can help you in any of these states. We can help you in Alabama, Colorado, Connecticut, DC, Georgia, Florida, Hawaii, Illinois, Indiana, Kentucky, Louisiana, New Mexico, New Jersey, Maine, Maryland, Massachusetts, Ohio. I won't continue to go on the list. I know that you can read. You are going to get a replay of this as well. But we can help you in any of these states. If you're looking to invest, or if you have friends or family, or if you know of an investor in these states, please make sure that you connect them with us. We would be really honored to help. And so that is a brief overview of our no income, no job, no problem loan. Again, we don't verify your income. We don't verify a job. We just want to the lender just wants to make sure that there is some type of DSCR. So depending on your loan to value, as we had talked about, it may be no ratio if you want to put that 25% down, or, if you're really looking for a great rate, that lender may require that the DSCR may be 1.25. So again, my name is Andre Munar, president and co-founder here at CoLab Lending. Let's see if I have any questions here. Go ahead and stick them in the chat or the Q&A section. I see, Caroline, I see Puerto Rico, Jessica from Houston, Texas, Jim from Erie. New York, Christina, good to see you. Thank you so much for joining us. I know that you have a property here in Puerto Rico, so thank you. Miss Fedison, how you doing? Really good to see you. All right, let's see what questions we have. Ivalice, I'm local. Can you share your info, email and website? So email is right there, Andres@CoLab Lending. Phone number is right there as well. That is my personal cell phone number. So definitely feel free to text that. And our website is colablending.com. Yes, the presentation will be available. You're going to be emailed a copy of this webinar, and it's also going to be on our YouTube channel. We will have a replay. Excellent product. Yes, it's all going to be shared. Yes, somebody asked if we have appraisers that you typically use in Puerto Rico. So as a lender, it's called an appraisal management company. So basically what happens is we have no control. The buyer has no control. The seller has no control if there's a seller involved, and they'll send appraisers out there. Hi, Milton. Jess, you can contact us for Texas as well. So yep, we can absolutely help you. So if I owned 2 beach condos, free and clear, how would this apply? So Carlos, that's a great question. If you own 2 beach condos free and clear, I'm just going to throw some numbers out there. If they're worth, $100,000, which I'm sure they're worth more, you can take out 80% of the cash. So if it's worth 100, your loan amount will be 80,000, or if it's worth 80, or if it's worth 1 million, you can take out up to 800,000, and then you can buy yourself some more investment properties with that 800,000. Caroline asks, in terms of Puerto Rico, the client has to have previously owned or currently own a property anywhere or in Puerto Rico? That's a great question, Caroline. So the client just has to own or have owned any property in Puerto Rico or in the United States. Even if it's outside of the United States, we may potentially be able to get some kind of proof of that. But the lender just wants to make sure that the client has some type of management experience. Bogota looks so cute in this picture. And that's my dog Bogota too, by the way, if you don't know. Christina asks, can these loans be used for investment Airbnb type properties? Yes, absolutely. Absolutely. You can do short-term rentals. We can do VRBOs. So yes. And then I answered Jessica's question. So you can contact us in any of those states that I had mentioned before. So if you are in any of these states, or if you have an investor, if you have friends or family in any of those states, absolutely, we can help you. Just reach out to us. In Puerto Rico, we have many investors who are challenged with a low credit score. How can we work with that? Ivalis, definitely give us a shout. We would love to work with those investors. We are huge advocates on helping people get better their credit score. So we are huge advocates for that. So we're not the type of company that says, hey, you don't qualify, goodbye. We really tell you how we can help you and how you can get there. We can do rescores in a lot of cases if they're very close, which is where we just tell them to, pay down a credit card and then your credit score will go to this. And then usually instantly that happens within 5 to 7 days. How many bips do these lenders add on top of the national average 30 or 15-year rate? So depending on your loan amount, your credit score, and your loan to value, the interest rates right now are anywhere between the 8s to the 12s. And usually, to be honest with you, the investors don't really care about interest rate, which is another great reason to use the Dscr product, because as long as it's covering your mortgage payment, really somebody else is paying that mortgage for you. And so we've seen a ton of clients who say, I really don't care what that rate is, or they're in high interest rate hard money loans. I've seen 18, 19, 22%, and they'll refinance it into a 10%, cut their payment by nearly 25 to 50%. And the investors are super, super happy. So, and I believe that is all the questions I had. Let's see. Great info. Colombia is a paradise. Yes, you're right, Carlos. Colombia is a paradise. I think they're right there. Colombia and Puerto Rico are hand in hand. Rehab loans for flips. So the Dscr is not for flips. If you are interested in doing flip properties, we do have fix and flip properties, not in Puerto Rico, but in other states. So if you are interested in doing fix and flip, definitely reach out to us. We can definitely help you there. Brian Allen says, I had a client who did a Dscr loan, but no history. Because she was retired and going to be buying more, they gave her a pass on management. And Brian brings up a great point. That's why I said it's kind of just a high level overview of the loans. We can get exceptions. We can work with a lot of things, especially because these are portfolio loans. These are investor loans. These are non-QM loans. They don't have direct Fannie, Freddie. They don't have direct Fannie or Freddie guidelines. Can it be used if the building apartment has more than 4 units? Jessica, that is considered a commercial loan. So these are only for residential loans. Caroline says, instead of owning or previously owning a property, would having a management history be enough in Puerto Rico? Yes, Caroline, that would be enough. Absolutely. Do we have any other questions? Again, my information is there. I'm happy to reach out. That is my personal cell phone number. So if you have questions, absolutely feel free to text. You can also visit our website, collablending.com, and visit our loan officers there. Make sure you reach out to your favorite loan officer at Collab Lending, support them, ask them questions. We're here to help you. We're so happy that you joined us today. And if there's anything else that we can do for you, please reach out. I hope that you have an amazing Wednesday. Thanks so much.